Hi, welcome back. And we will just continue from the just ended session. Yeah, we just treated lesson 3 and we will be running to lesson 4. So lesson 4 will be talking about tax accounting principles, which will cover year of assessments and basis period. Basically, the year of assessment and basis period, when you understand this, then you have like more than 50% upper hand taxation. Right. So let's dive into this. Let's pay keen attention and then look at how we can do this lively. Right. So this will cover differences between year of assessment and basis period, and also understand the various types of basis period. All right. So the key topics here will be year of assessment and basis period. All right. So these are some books you can get for yourself. Right, so year of assessment. So what is a year of assessment? So the year of assessment is more or less like the government financial year, the government fiscal year, the year that the government want to take tax, the year that the government will calculate and then tax us, whether we individuals, whether businesses or investments. So its income tax year can be defined as the year in which taxes are levied and collected. So year of assessment is the government financial year. It also refers to as the national fiscal year, usually a period of 1 year. That is from January 1st, 31st December. So meaning that government will be taxing each and everyone within the year of assessment. So if you enter any business or any employment avenue, you will be taxed within the year of assessment, right? So in ordinary sense, it is the period under consideration for tax purposes. So the period in which taxes are collected and uh, are calculated and collected. So invariably, the year of assessment is the same as the fiscal or budget year, right? So, it is the budget year that determines the income tax year. So, for example, in UK, the government budget year is from 6th April to 5th April the next year. India is from 1st April to 31st March in the next year. And then in Ghana, since 1983, the year of assessment of every person is the calendar year. So initially it was having a different date, but from the year 1983 up to today, it is the government calendar year, which is from 1st January to 31st December each and every year. So it used to be July 1st to 30th June. Yeah, that was um, what it was then, but now it has changed to 1st January to 31st December. So basis period. What is basis period? Basis period is more or less like the period in which you've worked in the year of assessment. So we can take, for example, let me see if I can get. All right. So let's take the year of assessment as a bigger picture. So let's say the year of assessment is this big box, right? So any work that was done that is needed to be taxed will be within this year of assessment. So the inside box here is the basis period. Is the basis period. And then the bigger box is the year of assessment. So it's the basis period is more or less like the number of days, months in a year that you've worked, right? So we will dive into this very soon. That's basically it. So if you really understand this, then you are good to go. So this is the base. So basis period is the period by reference to which the assessable income of a person is computed in accordance with the provision of the Act 896. So the period by reference to which the accessible income of a person. So meaning that the period in which you've worked within the year of assessment, right? So it is the period by reference to which the accessible income of a person is computed. You get it? So it defines the income to assess in a particular year of assessment. So the income that is to be taxed or to be assessed in a particular year of assessment. You get it? So if in case the year of assessment is from January to December, 1st January to 31st December. So if in case you open a business that starts from, let's say, July, right? Even though your year of assessment, for example, is between 1st January, 31st December, your basis period will start from the July you started the work up to the ending of that year, right? For that particular year. So now, Section 18, 2A provides that for an individual or a trust, for an individual or a partnership, the basis period is the calendar year. And we just said that the calendar year is from 1st December, 1st January to 31st December. This is from, okay, yeah, this is from 1st January to 31st December each year. So for a company or a trust, the basis period is the accounting year. So the business's accounting year. So if the business has an accounting year of, um, let's say 1st April to 31st March, right? That will be their basis period. So a company or a body of persons shall not change its accounting date unless it obtains, so you can change it, but unless you obtain a prior approval in writing from the Commissioner General and complies with any condition that may be attached to the approval. But in some cases, okay, yeah, let's move on. So the following, so these are the types in the previous times we were using preceding year uh, kind of way of assessing people, and then we move on to the current year, and then Ghana is currently using the accounting year to tax. So preceding year concept means that taxes are assessed a year later, right? So it was being used between the 1944 to 1981 year. So the government fiscal year was first from July 1st to 30th June. That was then, right? And then it was moved to preceding year. This is the advantages, right? So it's one of the advantages was that because you are trying to tax a preceding year, like a previous year amount, you are certain or you know the amount that you are going to take. And then the disadvantage was that it also delays realization because you will not get the tax the same year. And also time value of money. So inflation will also harm that particular amount. And then we move on to the current year basis, right? And currently we are using the accounting year. So the accounting year system was introduced by the PNDC law 192 in the year 1987. The system requires that income from trade, business, profession, and vocation should be subjected to tax on the accounting year basis. That is the income reported by taxpayer based on his accounting year is subjected to tax. With this concept, there is no change in definition of year of assessment, right? So let's look at this example for basis period and year of assessment. So for example, if a business prepares accounts on 30th June each year, right? So meaning that it started what? It's so meaning that for example, if a business prepares accounts on 30th June, so meaning that it normally starts 1st July and then at 30th June, right? Its year of assessment and basis period for 1999 year of assessment will be as follows. So if we want to assess his income in the year 1999, right? Then it will start from 1st July 1988 to the 30th June. So you see the year of assessment, for example, 1999, meaning that from the previous year to the current year that you are assessing the income. That is what it means here. For example, if a business prepares an account. So you see, what makes this, so the year of assessment is what, 1999, right? So the basis period will start from the, since it is not from January to December, it will start between a 1 year. It's supposed to be a 1 year period, right? So if you want to assess the 1 year period up to the ending this thing, right? 1st July 1988 to 30th June 1990. Let's look at another example here. So Kofi, a sole proprietor, has been in business for many years, preparing accounts 30th June each year. What is the basis period for Kofi for 2016 year of assessment? So see, the account is being prepared on 30th June each year. So meaning that it started business 1st July, right? So in the year 2016, right, his year of assessment in this, his basis period will be working from 1st July 2015 to 30th June 2016. So we just normally just pay attention to this, and then the last year here, right, to get the whole concept. So another example here, ABC Limited commenced business on 1st September 2016, preparing accounts to 30th April, right? Here, for the first year of assessment, look at it here. He commenced 1st September, but he has agreed to what? Prepare account to 30th April. So basically, this means that his first year of assessment wouldn't be up to 12 months, right? So we will have September, November, December in the year 2016, and then on 2017, for example, we will have January, February, March, April, right? So 4 months here, 4 months here. We will have 8 months in the first year of assessment. So more or less like the 2017 year of assessment, we are going to have only 8 months. But in 2018 year of assessment, you are going to have 12 months because it will start from uh, 1st May to 30th April. Then the 2019 will also start from 1st May to 20th April. Let's see if that's what's in the answer here. All right. All right. So the first year, 2017 year of assessment, you can see that it started from 1st September 2016 and ending at this. Always, I'm telling you to always keep an eye on this. So the ending year should always be equal to the year of assessment. The ending year should be always equal to the year of assessment if you don't want to get confused, right? So 1st September to 30th April, that was what they said, preparing. So that's the first year, right? The preceding year, the next year, sorry, will be 1st May to 30th April as usual. Then the next one will also be from 1st April to, so always keep an eye, 18, 18, 19, 19. Right, this will make it easy for you. All right, so this concludes this session. I hope you understood some concept. We will solve more questions and also get hands or upper hand on this. So thank you very much for watching this video. Kindly like kindly like this video and also subscribe to the channel. Thank you. Bye.